Welcome, welcome, welcome. Welcome to another Wall Street Wednesday. Let's see, today is October 13th, 2021. This is episode number 66. As usual, I always start off my episodes with these are my opinions, my thoughts. If you're going to do any type of trading or investing based on my opinions and my thoughts, you should definitely speak to your financial advisor or whoever it is that you work with that gives you advice on your trading or investing. So, hey, what's going on? Hi. So again, hey, what's going on, Andy? So that's my disclaimer. Um, I'm going to go through some things. Good afternoon. Appreciate it. Guess who's back? I'm going to go through some things today. I'm going to go through my usual. I'm going to talk about the cryptocurrencies. I'm going to talk about the futures market. I'm going to talk about some stocks. But before I do all that, I just want to reiterate. And these are recordings, so I want to keep the recording. So I want to reiterate a couple things. And one is, in this environment, there's no reason to go out and try to pick bottoms or pick tops. One of the things that you always hear me talk about is don't buy the dips, don't buy the dips. Well, this market shows why you don't buy the dips. If you buy dips, you're assuming that it's only going to be a 1 or 2 day event, and then the stock's going to rally back. And as you saw that right now we're in a choppy market. The choppiness is coming from the I guess Wall Street and the large portfolio managers trying to figure out what they're going to do. They're all forecasting, which the Fed is telling us that they're going to raise rates next year. The other thing that's going on is that they're expecting the Fed to start tapering between either November or December. Now, for those of you who don't know what tapering means, it means that the Fed's going to stop buying back assets. If the Fed stops buying back assets, it means that they're going to stop putting cash into the marketplace, which means they stop buying, no more cash is going in. And by the way, for those of you who don't know, that cash is one of the reasons why the downturn we had in 2020 was not nearly as bad as it could have been. The Fed pumped a ton of money into the system. The Fed now said they're going to slow down. Now, that's good and bad. I'll explain to you why. The good news is by the Fed slowing down the system, and putting money into the system, it's actually going to move interest rates up. Interest rates should go up. As interest rates go up, it's going to strengthen the dollar. All right, so that's the good news. The bad news is the Fed's going to tighten the money supply, which is going to raise interest rates. Now, again, we're not going to 9-10%, but you might see the short end of the Treasury bill get up to 1%. Interesting. I need to write that down. One of the stocks that is on my list to talk about today was up big today. And added to my list, INMD. All right. So that's what's going on with that. So that's what's going on with the marketplace. I'm going to repeat, I do not think that we're going into a recession right now. I am a big advocate of the yield curve theory. And I was basically going unbiased expectation yield curve theory. And I was actually going through all that data again yesterday and also this morning. And I'm looking at that data. And again, I do not see us going into another recession near term. Again, I'm going to tell you guys, I believe that this market correction is pulled back and going sideways. I believe it's healthy. Now, what you're seeing going on, too, is you're seeing rotation from institutional investors rotating out of certain industries and certain sectors into other industries and sectors. If you're managing a large portfolio, which these managers are, it can take them 6 to several months to move or, unwind certain positions and move into other positions. The size of the trades as well as the amount of money in the trades. So I see that. I think there's a sector rotation going on here. So I think that's what's going on based upon what we're looking at with interest rates and what the Fed's going to do over the next 12 months. But again, these are my opinions. All right, let me jump into it real quick. On the commodity side, and by the way, Andy and hi, feel free at any time. Oh, hey, Joe. Feel free at any time to ask questions. I know, Andy, I don't have to tell you that. All right. Let me give you the new stuff. How about that? Let me give you the new stuff, and I'll talk about the old stuff that we talked about. Cotton and cocoa, two shorts. Putting them on right now. They basically have broken below their 10-day moving average. They have huge short positions by the commercials. So I'm looking at that. I'm looking at the fundamentals and the technicals, and you can short right now cotton and cocoa. I believe that both of those are really good shorts that you can put on right now. So feel free to take a look. I'll say them one more time just because the tone and the accent: cotton and cocoa. Now, we've already put out a recommendation on oats. We talked about oats. Oats continues to run. I'm talking about oats, like Quaker Oats, the oatmeal, oats. Oats continue to run. I'm going to type it in. Oats. Oats. And, where's my other one? Oats. And heating oil. They continue to run. They're running. They continue to run. If you got long, in fact, I'm looking here, my notes. We put oats on, 3 weeks ago, 4 weeks ago? We talked about oats. Heating oil's been running, so no big deal there. I would stay long if you're long, and use the 10-day moving average to decide when to get out, or use as your exit strategy, the 10-day moving average. Heating oil has moved very close to the 10-day moving average. But again, don't close out your long position until it breaks that 10-day moving average. All right. Oh, and this other one. Stay short OJ, orange juice. Stay short orange juice. So the other one is orange juice, OJ. Stay short OJ. If you're short, stay short. I'm just typing it in. Jeez, my fat fingers are hitting everything. All right, so stay short OJ. Those are my commodities. I'm going to read them one more time. Read them real fast. If you're long oats, they continue to run, stay long oats. If you're long heating oil continues to run, stay long heating oil. Oats and heating oil, if it breaks its 10-day moving average, sell, close out your position. Also stay short. Now, if you're short OJ, stay short OJ. And I've been hitting the table on that for 3 weeks also. So stay short OJ. New recommendations on the commodities: short cotton and short cocoa. The other thing too, which I'll mention, has been really interesting, looking at the way the currencies are trading. The dollar as well as the euro, the Swiss franc. You've had a couple of those currencies make some significant moves. So it's interesting to watch. And the dollar, which was running, the dollar had a little sell-off the last couple of days. All right, let's move on to the cryptos. Cryptocurrencies. Let's see. Bitcoin, a 5-month high. Bitcoin has hit a 5-month high at $57,000 in that range. You're right near the $60,000 resistance. If it breaks through this 57, expect it to go through that $60,000 resistance. You get through that $60,000 resistance, you're challenging the old high. So Bitcoin is trading really well right now. It looks like it should challenge the 60,000. And if it does take that to 60,000, expect for it to go up to that 64,000 number and attack the old high. To the downside, $53,000 is in the trading range right now. And if it breaks that 53, it could go lower. But again, on Bitcoin, it's trading extremely well. Looks really well. I expected, the way it's been trading, I expected to take out that $60,000 number and to go ahead and attack the $64,000 number, and go for the old highs. Ethereum's in a narrow trading range. It's between 3,400 and 3,600, 3,650. Ethereum's in that short trading range. If you can get through that 3,650, expect for it to go to 3,400 to 4,000. If it does not hold support at 34,000, then next stop is 32,000. Trading well, not as well as Bitcoin. Bitcoin's trading extremely well. Ethereum's doing okay. Cardano ADA. Right now, you're sitting at support at $2.04, sitting right at support. You got resistance at $2.30. You get through that 230, expect it to trade between 240 and 260. Again, trade between 240 and 260. If it does break down, it will break down to that $2 number. Hi, I was speaking to one of your classmates from ASAP, and he actually has been trading ADA and doing pretty well. And for those who don't know, I got the recommendation, or I got introduced to Cardona ADA from another one of my former students. So it's always cool when I can speak to people, former students, and get information like that. All right, what else? Ripple. Ripple has a lot of work to do. Ripple's in the trading range between $1.05 and $1.20. Tons of work to do. I would stay away from it now and just watch it trade. Doji, I'm going to call Doji dog coin now. I'm going to get rid of the E. Trading range between 22 cents and 25 cents. If it can break through that 25 cents, you're going to see a nice try at 35 cents. If it doesn't hold the 22 cents, then expect it to trade down to 20 cents and maybe even as low as 17 cents. I don't like this coin at all. I don't see any value in it. Basically, all you're doing is you're trading something that's based on what other people want to pay for it. There's nothing behind this coin. Now, the other one, I don't even know how to pronounce this one, so I'm going to type the name. You guys gave it to me last week. The currency, it's a currency, it's a cryptocurrency. It had a huge spike. I told you that I would not trade it right now because it basically had, it made a tremendous move. When I say tremendous, we're talking about a 400%, 500% move, something like to that effect, over a 3-day period. So, and I got to be careful because let me say a couple things. One, this SHIB has formed what's known as a bullish right triangle. A bullish right triangle has resistance, but it also, what you'll see is as it's trading, the lows get higher. So higher lows and, thank you for the pronunciation. It's named after a dog, huh? Shiba. I'm just going to call it Shiba. I can't even pronounce the end part. Shiba Inu. Sounds like a nice dog. So anyway, it's formed a right triangle. Right triangles are really bullish. I had told you that I thought it would pull back in. It pulled back in, did some backing and trading, formed this right triangle. Right triangles to the upside are bullish, which is what it's formed. I hate to say this, only because it's hard for me to say. The current price, if it breaks through, and I got to type this in because I'm looking at the chart and these are the numbers. It's a 0, then a point, 1, 2, 3, 4, 30. All right. That's the price. If it breaks through there, if it breaks through that 0.00030, you should expect it to attack the old high, which is at 0.00035. All right. It looks extremely bullish. I don't know anything about the actual current, the coin itself. Thank you, Mr. Cornfield, for giving it to me. But the bottom line is this thing is trading extremely well. I'm pulling up the chart as I speak to you right now. SHIB. Where'd you go? US dollars. Is that the one I want? Yeah, that's the one I had. Yeah. I'm looking at the chart again. So it's done what you want it to do. It's done some backing and filling. It's created this right triangle off the major run it had. And again, just so you guys know, the new ones I'm coming on, I'm talking about SHIB, cryptocurrency. We talked about it last week. It's trading extremely, extremely well. And if you take a look at the chart, you'll see the right triangle. If you take a look at the chart, you'll see the right triangle. If it breaks, which it should break to the upside, and when it breaks to the upside, expect it to go and challenge that old high. A breakthrough, and I'm trying to give you the numbers best I can, approximately, and I got to type this in because this thing has, at least on mine, it has crazy numbers. 0.123433181. Yeah, believe it or not, that's the number. I don't even know how to read it to you. And I've done commodities where, things trade in tenths of a penny. I'm not sure what this is, but it breaks through that 31, 81, 32, that range. It breaks through that, expected to challenge that 35. Yeah. And the other thing, too, which is also good on this, is that the volume's been drying up. So you're seeing this thing backing and filling and forming this angle on low volume. So once the volume kicks in, this thing will probably take off again. So just keep an eye on that and look for the volume. I don't know where it came from, don't know much about it, but technically it looks like it's ready to run again. All right, now I'm going to jump on a few stocks. Let me jump on a few stocks that we've talked about in the past. I'm going to type them in, and so bear with me as I type them in. Where's my $sign? So what I'm typing in right now, and there's several of them that I'm going to type in over the next couple, as I do my lecture today, my conversation today, my Wall Street Wednesday. Some of these things are trading extremely well. So that's what I'm trying to show you, the ones that are trading extremely well. And I'm typing in the symbols as I do it. And what I'll do is I'll type in some now, and I'll type in some more in a second, because I'm actually getting tired of typing. Let me see. And I'll just put one more for now. And then I'll add as we go. There's a few. All right, so let me add this one. All right, what I just typed in was, I typed in four or five stocks. Now, let me explain what these are. Every one of these four stocks has either gone to or set a new high over the last 2 weeks. So while all this turmoil is going on in the marketplace, where they're rotating out of this, they're rotating into that, they're selling this off, they're buying more of that. The portfolio managers are bottom fishing, doing some things like that nature. And these stocks, not only did they hold up, they went to new highs. One of the things for me is if you're trying to find a great company, a good company that you think could do well, look at the ones that don't sell off when the market sells off. Look at the ones that hold up while the market's actually going sideways or going down. Upstart and Affirm both of them have made some major news announcements. I believe Affirm is Target. I think Affirm now is giving revolving credit at Targets. I think that's what it was. But they're all taking off. So you're looking at Upstart, Affirm, HubSpot, Netflix, and I always pronounce this wrong, so that's why I'm slowing down. And I've traded this stock for years. Oh, come on. And InMode. Thank you. So InMode's not at the old high. Take that back. InMode it's at 85. The old high is 90. But the rest of them are basically right at their old high or new highs. So, and there's a couple more I'm going to add. So let me add those too. And the thing about these other ones I'm adding, a shout out to another one of my students. These came from him. These came from James. Of course I can't type. There's one. All right, and let me put the other one up. All right, so Cornet Digital. Old high was 164. It pulled back, and it's trying to run. It's not at the old high, but it's trading extremely well. I would take a look at that one. The other one is ASAN, which is ASAN Industries, or ASN Inc. ASANA Inc. And again, same thing, sold off and now it's rallied back. The old high is 124, 125. You're sitting here at 114. So these are trading extremely well. Now, I say this to you guys all the time. I say it, and I'm going to keep saying it. When the market's choppy and a downward trend choppy, I hate to say the word easy. So I'm not going to say the word easy, but one of the things that you want to look at that you can get on the short side of are recent IPOs that did not hold their syndicate bid. The syndicate bid is what they were priced at. So if you have an IPO that goes public at $20 a share, opens up and runs at 30, that's great. The syndicate bid is sitting there at 20. Now at 30, the syndicate are the investment bankers. they put a bid out there. So they typically put a bid out there at the IPO price. If the stock runs, they'll back away and leave it alone. There's no reason. If the stock doesn't run, they're going to sit there and try and hold it at the IPO price. The stocks that I'm about to talk about, they have broken below their IPO pricing. And again, I talked about that. I'm saying all the good news is out. Everything's going on. In fact, I'm going to give you a few. Well, let me type these in. These are ones I think that, believe it or not, still have more downside to them. And I've been talking about them with you guys for a while. And so I'm just putting them in here. Keep your eye on these. I'm not saying that the company is going out of business. I'm not saying that the company is not going to do well. What I'm saying is the company is not trading well. And the other thing too is, which most of you know, most IPOs don't last. They don't make it. All right. These three just went public recently. These three are trading extremely poorly. These three you can short and still stay short. So Sportsrad. Let's see if I can give you the number. Sportsrad is trading right now at $21 a share. We started speaking about this thing at 25, I think it was. I can't remember what the IPO price is. I don't have it written down. Oh, I'm sorry, priced at 27. So there you go, sitting here now at 21. Today's been as low as $21 a share, closed at 21.66. Oatly, the oatmeal milk, another one. Oatly was priced at 17. Stock has been as low as 13. It bounced a couple of days ago and ran to 16, and now it's back down to 14. So that's another one. And then not the last one, but this one just came public recently. Lifetime Group, restaurant chain. Lifetime Group was priced at $18 a share. The highest the stock's been was the first day at $18 and hold on a second, I'm gonna get you the number. The first day at $18.02. That's the all-time high, first day. So right now it's been trading sideways. There's all the good news that you can expect on this company's out. So I'm not sure what's going to drive it, but again, I'd be short. And again, like I always tell you guys, deal was priced at 18. If you're going to short it here where it just happened. And I'd put a stop in about $18.50, $18.25. Probably $18.50 is where I put it at. So those are shorts. Now, a couple other things I just want to, and I'm going to give you guys time to ask questions, but just let me type these up. Dollar sign. Bear with me a second, guys. Oh, that's not what I wanted to do. Oh, well. Let me type some more. Hit the wrong button. Let's see it. You got Whoosh. You can actually look them up yourself, too, if you're in front of a machine. Whoosh. That one is Honest. Whoosh is Content. And the other one is DNUT. Welcome, guys. Welcome. All right, the last three stocks I put up. Wish, W-I-S-H, which is Content. Went public, I guess, about a year ago. Content Logic. Stock, well, I guess I got to do it. Let me put up the whole chart. Stock's been as high as $32 a share, and right now it's trading at $5 a share. IPO. All right. You hear me say it did not make the turn. Jessica Abbott's company. I talk about this all the time. They had problems before they went public. I'm not sure what the public price is, but the all-time high is $23, close to $24. And right now, closed today at $9.48. Now, what was the telltale on this? Before she went public, took the company public, they had gone out into private equity and raised funds. The last two rounds of funding, they kept lowering the price. So the VCs that were investing in this company before it went public but buying and investing in it, but at a lower price, which means they lowered the valuation and lowered the valuation. They brought this thing public, and you can see what's done. I mean, I'm telling you, has not traded well. You can track these things. I hate to say the word easy money, but there's a lot of weight on them. They're not going to do well. The other one I just put up was Krispy Kreme. Again, I got nothing against Krispy Kreme. Love donuts. You guys know I love my donuts. The highest the stock's been is almost $22 a share. Right now, sitting here at $14 a share. Stock is not trading well at all. And hold on a second, I'm pulling up a daily chart. Not trading well at all. You've had a slight bounce. If it doesn't hold near-term support at this $13.73 level, your next stop is down here at $12 a share, somewhere in that range. All right. One other stock, and I apologize. I'm going to give you guys a minute to go through. Just so you know, we've been talking about Tractor Supply. We've been talking about how well the stock was trading. Well, I don't know what happened to it, but over the last couple of days, it has sold off. It sold off hard and fast. So it's come down from this $210, $212 range to right now it's down to $194 to $194 in the bottom of a near-term trading range. Interesting also because earnings are due out this month. And that's what reminds me, make sure you guys keep track of your earnings because earnings are due out. All right. That's everything I have for you. Oh, one other thing. S&P 500. You got support at 4,300. You got minor resistance at 4420. If you get through that minor resistance of 4420, believe it or not, you're still in the range to attack the old high. Now, again, I know I say this a lot. My strategy is what? My strategy is to buy them when they're breaking out and going to new highs. All right? If you follow my strategy, you could not find too much to buy in this market over the last week, 2 weeks. That's what this strategy is built upon. That's what this strategy does. It kicks you out of the market. You don't have to think. You just can't find anything to buy. All right, here's what I'm going to do. I'm going to open it up now for any charts, any questions. I'm looking through. I don't see any stocks yet that you're asking me for. Mr. Cornfield was at work. Maybe he's home now. I mean, normally on Wednesdays he's at work, so maybe he's here. But I'm looking through. I don't see any. So what I will do also is I'm gonna address something else that's been on my mind, and that is an investment thesis. Yeah, I said the word thesis. That's why I'm typing it in. An investment thesis. Now, some of you have me as students. Some of you have never had me as students. An investment thesis is an overall thesis on where you think you're going to make your money. So let me give you an overall thesis. Overall thesis, and you all know it, the pandemic has created, and I'm giving you something near term that you can follow. The pandemic has created a shortage. We have a global shortage of goods and services. All right, that's an overall theme. So we know now that if that's our theme, then we know that we can make money based upon this theme. Now the question is narrowing down this theme to where we can find a catalyst and what company is going to benefit from that catalyst. So let me explain. A couple of weeks ago, one of my former students was on the show, and he put up several what he called shipping companies, shipping stocks, where they either ship the goods or they actually provide the containers to ship the goods. But he put up several companies. All of them had taken off and gone to new highs. I posted a list. Now, the reason why I'm telling you this is what he was doing was he put together a thesis, a theme, and a catalyst. His thesis was we got a short. We got all these ships sitting over there in San Pedro over there at the docks. They can't be delivered. They won't allow any more ships to come in. We've got a shortage of almost everything out there. So his thesis was, what can I buy that's going to, where I can make money based upon the fact that there's a shortage and there's a global shipping problem. And he immediately went to the container companies, the shipping companies. He went there. And that's what he did. Now, that was his thesis. Now, at some point, it's going to create for us a catalyst. And a catalyst is some type of event or action that's going to either drive value up or drive it down. So, to give you an example of a catalyst for your car is gas. You drop gas in, boom, there's your catalyst. All right. So what's going to drive the stock higher? What's going to drive the company stock higher? When you have the ability to understand, to create a thesis, or find a thesis, and then find the catalyst within that sector or industry that's going to drive that particular stock or stocks, that's where you're going to make your money. The analogy I'm going to give is if you put all that in place, it's like going down to the beach and going surfing, but you want to go surfing when there are big waves, not when there are little waves. Typically, you're going to go surfing during high tide, not low tide. So all we're trying to do is put our ducks in a row by having a thesis, having a catalyst. That's us going to the beach to go surfing during high tide when we expect to find bigger waves. All right. So where will you find your thesis? Most likely it's right on the cover of the newspapers. Most likely it's one of the things that you'll see in the news. All right. Now, when you watch the Financial Channel, they're trying to narrow it down for you and tell you what companies they like and why. All I'm saying to you is if you go look at the newspaper, it's going to start up here. And from here, it works its way down. And when you can actually open up your newspaper and start putting together a thesis, and you want to be forward-looking in your thesis, you're going to actually start making a lot more money than what you're already doing. So again, the market is a forward-looking mechanism. Yeah, we might look back to see what happened in the past, but going forward carries more weight than what happens in the past. You don't make money off of the past. You make money off of the future. So be forward looking, look at these things and look at things that's going to happen. Case in point. Now, case in point, as soon as Southwest Airlines had those flights canceled, as soon as that happened, all right, what happened? The other airline stocks had a little bounce to them after they realized it was only Southwest and the rest of them didn't have that. So they had a little bounce to it, all right? That was a short term, but that's what you're looking for when you start to read into this. All right, enough of that. I got a couple of stocks here, so let me go through. As always, I knew Mr. Cornfield always has some stock. ASIX. I'm going to a weekly chart. I'm going to zoom out. And the only thing, well, let me add a couple things. Mr. Cornfield, I like the chart, but my hesitation is this. The stock is basically right near its all-time high, but that all-time high was set back in 2017. All right, we're challenging that. So it means it's worked through a lot of stock to get where it is right now. So I would say to you that I would like to see a nice strong move to this 40, get the number. From this 46 number, I'd like to see a strong move to that 46 number. I don't think you have a problem getting through that 46 near term, but I like to see that get through that 46 number, and I think you're going to see this thing start to run. Near term, ASIX. Near term, you had a breakout from $38 a share. It ran, backed and filled, ran, and now it's back and filling. You're in the trading range between 40, 44, and 46. It's trading really well. So I'm not sure what they do. I'm not sure what the announcement was. And it's not earnings because earnings were back on July 30th. Yeah, so maybe earnings aren't due probably till the end of the month. 3 months ago. 3 months. So the only thing I would say is I'd like to see it, conventionally go through this 46, because believe it or not, you have some portfolio managers that own the stock since 2017 up there near the old high, and they're sitting there saying to themselves, once it gets back up here, I'm probably going to sell it. So that's the reason why I said I'd wait for it to get through that 46. If you're already in it, just stay with it. All right, the other one, MC. Moelis. Switching to a monthly just so I can get all the data. Same thing. It sold off. So it hit a high of $67 back in June 2018. Backed off and then broke through it again. It broke through it just now. This month. So let me switch to a daily chart. Yeah, another one. Broke out from $64. And after it broke out at 64, it ran. It did some back end filling here around the 68, 67 to 69 number. Volume's been drying up as it's been going sideways for the last, 2 or 3 days. Actually about a week now. In that trading range. You take out that old high and you move towards $70 a share, I'd be a buyer. Understand that you got major support down here at $64 a share. But if you're looking for a short-term trade, yeah. And the chart looks really good long-term. All right, LNG. Energy stock. I always got to go to my monthly. For those of you who don't understand, the less frequent the chart, the less volatility you'll see. So a monthly chart shows a lot less volatility than a weekly chart. And a weekly chart shows less volatility than a daily chart. But when you look at a daily chart, you're looking at all the volatility. It looks like your LNG has gone to a new high. All right, so that's the first thing I'm going to say to you. But the other thing about your LNG, yeah, same thing. Broke out through 92, ran. Now it's in the trading range between 100 and 105. And today it actually took out the old high and set a new high, the all-time high. Volume was somewhat light. Again, I'm not sure what this is. Looks like an energy stock. Yeah, I know. I wish, whenever I can, I try and put my charts up. I'm trying to figure out how you guys can actually see my charts as I do this. It's really hard on Instagram. All right. So on the LNG, it's trading range between 100, 105. Volume's, a little light. But again, if you're in this, I would say it backed and filled, and you should see it continue to run. If you're looking to buy it, probably can go ahead and buy it right now. The chart looks really, really good here. And you guys know my philosophy. Buy high, sell higher. Buy high, sell higher. And the last one for Mr. Cornfield, THRM. Is that what I think it is? No, it's not. All right. I thought it was something else. So again, I'm on my monthly chart. I'm going back some ways. All right, cool. The good news is stock been around since 1994. 1994 is when it set its old high at around $64 a share. We took that out convincingly. So based on that, I like what I'm seeing so far. Let me switch to something a little more near term. I'm switching to my daily chart, and I don't know why that's there. Bear with me a second. I got my moving averages in there. I don't want my moving averages there. All right, so near term, what would I say to you guys? I don't know the company. I would say what's interesting is the stock set a new high at 88 back in near the end of August. It sold off ahead of what was going on here. Recently, the recent events sold off to basically 77. And then even with the recent events, it's actually pushed and ran back up to the old high right there at 88. And earnings are due out soon. So I guess the thing I'm saying is technically it looks kind of good near term. And all I can say is, but there's a lot of volatility in here. So it looks good, but there's a lot of volatility. The daily chart shows all the volatility. The weekly and monthly don't show the volatility. So all I would say to you is if it starts to run, starts to run, go ahead and buy it. If it starts to pull back, probably take your profits. It looks like it can have days where it pulls back, it pulls back substantially. I'm looking at this one day or a couple of days when it hit the old high at 88 and then pulled back over the next 3 or 4 days down to, $83, $84 a share. 10% move. All right, give or take. Let's see what else. All right. Those are all the ones I see. That's all the ones that somebody gave me. Any other stocks or chart you want me to look at? I did mention Netflix. Let me just say this. Netflix is trading extremely well. Don't ask me what's going on. Now, this is me. So let me add a couple things. One is Netflix, and I'm pulling up the information. Netflix. So here I'm going back. January 2021, Netflix beat earnings. Stock went from 520, it looks like, as high as 580. The next quarter, they missed earnings. They beat the number, but Wall Street was looking for a different number, and the stock went from basically 550 down to $500. Then the last quarter, July, they missed the number, and the stock basically sold off again from 527 down to $500. Earnings are due out for this stock on the 19th. All I have to say is this. Stock's trading well near term. It's done some backing and filling. So your trading range right now on the stock is between 623 and 645. But I'm here to say something. If it breaks out, I'd buy it and maybe trade it a little bit. But the other thing I'll say to you is I probably would not go into the number long or short. I wouldn't play this number ahead. And the reason being is the way this stock's been trading off the number, I just wouldn't chance it. And if I remember correctly, the last earnings report back in July, they did not sign as many subscribers as what people were expecting. Now the pandemic's over, so the subscriptions might be down. So I would just be careful with this stock. Trading well, basically all-time high, but again, you do have earnings in a couple of weeks. And I'm always bullish stocks that set new highs ahead of earnings, but Netflix has been disappointing, and it beats expectations then disappoints. So I would just be a sideline play on Netflix. What is this? ORLY. Oh, I haven't looked at this stock in years. How about that? O'Reilly Motor. O'Reilly Motor. The car parts people. Yeah, I'm kind of figuring that. I figured that. What I'm looking at right now is I'm looking at a monthly chart, and O'Reilly is at an all-time high. You can also put in there, what's the other one I had? O'Reilly, oh God. Can't remember the stock now. Don't get old, guys. There was another auto parts company that I was trading now. It's actually trading really well, but it wasn't O'Reilly. Can't remember the name. Oh well. Bear with me a second. Let me go to a daily chart. So you're at all-time highs. Stock's trading well. I'm not surprised it's trading well. Think about it. What's one of the themes going on? There's a shortage of chips. All right, let's talk about this. There's a shortage of chips that go into cars. All right. So there's a shortage of new cars. So people can't buy new cars. So what they're doing is they're having to stay with the cars they have and having to get those repaired. The other thing too is because of the shortage. So that theme of a shortage of chips or a shortage of cars, new cars, is showing up right here in the used parts department, used parts for cars. AutoZone, thank you. AAP was the other one. AAP, American Auto Parts, is the one that I traded. Thank you, Andy. So with that said, I'm not surprised. Again, think about it. Think about the theme. Think about the catalyst. What's driving this? What's driving this stock higher is the fact that there's less new cars. And people are having to actually get their cars that they own fixed because they can't get the parts. And then there's a premium on some parts. They're going up in price. That's what you're seeing here. Excellent, excellent, excellent. This is what I'm talking about. When you have these type of themes, when you can actually open up the newspaper and say, whoa, how's this going to relate to stocks? And I always tell you guys, I'm checking my time, there's no company that's by itself. All right? Each company has a supplier bringing inventory in. The company takes that inventory, they finish it, they make it a nice, wonderful new product, and then they move it on. It goes out there and goes to somebody else. It could either go to an end user, or it can go to somebody else who's going to take that piece of equipment, that part, that whatever, and make something else with it. So no company's by itself. They're all interactive. The fact that there's a chip shortage, it might be negative for the auto industry that they can't supply enough cars, which means they can't make the profit they could possibly make. But at the same time, there's somebody else benefiting from that, and that is the auto parts stores. All right? This is the way we think this through. All right? One of the things, when people tell me things, I used to always say this. I don't say it anymore because, I think I hurt people's feelings when I said it. But when somebody said to me, hey, Mike, one guy said to me, hey, Mike, I remember this like it was yesterday. He goes, hey, Mike, there's Brazil is defaulting on their world debt. I said, oh, wow, that's pretty interesting. And he said, yeah, so, that's really big news. I said, great. How do we make money off that? And he couldn't answer me. So my comment to him, which I say to people all the time, all right, that's great news. How do we make money off that? So when you start asking yourself these questions, looking at things, look at it and always say to yourself, how do I make money off that? All right, what company's going to benefit? What company's going to get hurt? How can I make money off this? And you won't be able to figure it out every time. Or you'll figure it out and you'll be wrong. You're not going to be 100%. But you're going to improve. I'm telling you, you're going to improve your trading. You're going to improve your investing. So with that said, O'Reilly looks really good. It took out the old high, and now it has a new high at 628. That's the top of the trading range. The bottom of the trading range is just a hair above 600. And you have earnings coming up again. So I wouldn't be surprised. I wouldn't be surprised to see the stock run ahead of earnings and run on earnings. I wouldn't be surprised. And a lot's going to have to do, I've listened to their call. Now, between the three of them, you gave me O'Reilly, you gave me Advanced Auto Parts. That's the one I traded, Advanced Auto Parts. And Advanced Auto Parts reported earnings. Now, I would go back and look. They reported earnings of $2.74, I think was in line. The stock sold off and then rallied from there. So I would go check and look to see what earnings were announced for the competitors and see how the market reacted. I'd also read there and see what Advanced Auto Parts said, Andy. I would literally go into the annual report or go into the quarterlies, whatever they announced, and I'd actually read and see what they said about what they expect to happen to the industry going forward. That's your clue to what to do with O'Reilly. And I'm going to pull up AutoZone right now, AZO. AutoZone reported too, and AutoZone ran off the number. So I would go take a deep look at AutoZone and see what they said, because both of them would give you a good idea of what you can expect from O'Reilly. Good call, good call. That's the theme. That's how this works. That's how we do it. That's how we do it. Welcome, Angela Moon. Welcome, welcome, welcome. All right, any other questions? Any other stocks? Angela, you got some stock you want me to look at for you? Technical, or you want my opinion, or fundamentals? Again, I forgot the LL. Lumber Liquidator. I say, I can't believe this company's still in business. I really can't. What's that they say in trying to remember the movie now. God, I can't remember. The Matt Damon movie where he's playing poker, and James and he's playing poker that last hand, and the guy says, he's hanging around like crocodile blood. He just won't go away. That's Lumber Liquidator. It's hanging around like crocodile blood. It just won't go away. I personally would not touch the stock. And you can see, if you look, I'm looking at a monthly chart. The stock's been as high as 120 back in 2014. It's all over the place. One of the things that happened with Lumber Liquidator, which you guys probably don't know, back in the day, they were actually selling wood that was made with cyanide coming out of China, I believe it was. They had some major problems. They denied it. People were getting sick. They got sued. It's been a horror story in terms of this company. And they senior management now, again, the guys who were there when they actually had the poison in the actual wood floors that they were selling, I imagine those guys are gone, but they seem not to be the brightest crew. I wouldn't touch the stock, Andy, at all. I wouldn't even short it. I would just stay away from it. One of the things that over time, when you can't trust management to even tell you the truth, whether things are good or bad, then it's hard to trade that stock. I'm looking at the chart now too, and it's in a downward trend. Let me go to a weekly. It's in a downward trend for the last, hold on a second, zoom in a little bit. It's been in a downward trend since December of last year. And you've got lower lows and lower highs. It's just in a downward trend. You do have some near-term support right here at $18 a share. But the way this thing's trading and the way it's going, I would not expect it to hold that. Again, I'm going off a weekly chart. I needed more data. Yeah, I would not. I would if it doesn't hold that $17 number, $18 number, it could really drop from there. Yeah, after the 17 number, and this 17 number goes back to 2019. Yeah, if it doesn't hold at 17, your next stop is down here in the 13s. So I'd be careful with this thing, this Lumber Liquidator. Let me say this to you guys, and I mean this with all sincerity. For my newer people who are new to investing or trading and never done this before, I'm going to say this to you. I think if I was, which I'm going to do, if I was teaching you, starting you out, and you said, Mike, I want to be a trader, I think the first thing I do after we get past the phase of what is a stock, what does it mean to go long and short, after we get past the basic things of that nature, I think that the thing that you should actually study and learn first is actually technical analysis. It's interesting. You go out and find any great company, and I can almost guarantee they got a great looking chart. And what's interesting is when you start looking at stocks that are setting new highs and trading high and going places, they typically have a very good looking chart. And the ones that typically go sideways or down have ugly charts. Now, Warren Buffett does not use technical analysis. Warren Buffett actually goes in and looks at the fundamentals, and he tries to buy assets at a discount. All right. Here's the thing I'm going to say to you. If you want to follow Warren Buffett's strategy, by the way, one of the richest men in the world, so his strategy does work. But his strategy is basically a long-term hold. Warren Buffett himself is not a trader. So when Warren Buffett buys a stock, he looks for stocks that are basically out of favor, trading at a discount to their intrinsic value, and then he looks to hold them forever. Warren Buffett will tell you, I buy a stock with the intentions of never selling it. So if you want to be a value player, it's okay. Buying assets at a discount. Just know that you're going to be a longer term holder. Now, over time, they've done studies on whether and by the way, Warren Buffett's known as a value investor. What I've been showing you when we're talking about buying new highs and higher, that's a growth investor. They've done studies over time. Neither method is better than the other. Certain methods perform better in certain market environments. That's basically what boils down. And no one strategy is going to work in every market environment. Now, the one thing I give Warren Buffett for is that the kind of value investor he is, he's buying stocks out of favor. He's buying stocks that pretty much, for whatever reason, their prices are down. All right? Now, understand, I'm not saying the price being down is the reason why he's buying it. I'm saying that something's going on internally with the company or some place in the marketplace that's taking the stock out of favor and the stock price has dropped. What he looks for is he looks for companies that are still doing well even though the stock price dropped. All right. He's not looking for companies that the price dropped because the company's not doing well. He's looking at companies that the price dropped, but the company's still performing. Because what he knows is over time, when things get better for that company, for the market, whatever the case may be, it's going to actually move back up towards that intrinsic value because the company's still doing well. It's just out of favor. That's Warren Buffett. Now, why am I telling you all that? If you follow his strategy, it means you have to be a long-term holder. That's why he says I buy stock with the intentions of never, ever selling it. All right, I don't see any more up here, so I'm going to wrap this up because I always want to see these recordings. I do appreciate you guys. I appreciate you coming in. For those who came in a little late, as you know, I will post this recording so you can actually go through it and listen to it again. There are some good little tidbits in there, some stocks that we talked about that could be some near-term trades in there. And last but not least, I'm going to wrap up with saying again, I do not believe we're headed into another major market correction. I do believe that this backing and filling, this consolidation is healthy for the market. And what's going on too, I know I said I was going to end. What's going on too, understand what's happening. The institutional investors who move size, who move markets, they're not sure what to do. They're having their problems. Some are saying that everything's fine and just go ahead and buy the dips and the market's going back up. You have some other ones saying that the market's in trouble because the Fed's going to start raising rates and stop stop tapering. So we having mixed signals. What I always say is the bulls, when the market gets too high in this environment, the bears short it. When it gets too low, the bulls buy it, and they're battling it out. I think over time, when I say time, near term, the bulls will win because of what's going on. I don't think the bears will win this particular battle. But that's what's going on. There's a battle between the bulls and bears, moving up, moving down. All right, guys, have a great week. Make lots of money trading. Tell me about your successes. Keep your horror stories to yourself. No, it's only a joke. Tell me about your successes, and I look forward to hearing from it. And tell me, like I said, if any of my ideas are working for you, please feel free to share it. I hope that, because the whole thing about this is putting money in your pocket. All right, I'm out. Have a great week, and I will see you next Wednesday.